Let's go over liquidity grab trading and how we can put our indicator in to set up these charts. So you can take a blank chart, you take our Sim outer edge indicator, and we can find out what levels where these liquidity grabs are going to occur, which I'll go over what a liquidity grab is in a second. But if you just want to put there's shallow liquidity grabs and there's deep liquidity grabs. If you just wanted the deep liquidity grabs to find extreme price levels where the market is likely to reverse for large potential runs in the market, simply insert our indicator twice and put a 200 in and I'll put 100 in. It's very simple. That's all you got to do. Put a 100 in and 200 in. All these values are the same. Speed period at 100, speed candles at 0. Here's our 30-year back tested best zone on the S&P, 54.38. You hit apply. What that's going to create these levels. It's going to create a deep liquidity grab pullback, buy and sells. So you see we have a 200 level and a 100 level. Now these are sells that happen on the NASDAQ futures, and I'll show you how it's a very leading indicator. We'll look at we're not even close to one on the S&P yet. We're in a shallow liquidity grab right now. Here's a shallow at 35.5 right now as we speak, but I'll show you what the deep are on this video. So a liquidity grab occurs, guys, basically when it's a whole concept of accumulation distribution. There's a temporary distortion in price, meaning I'll show you on a larger chart what it looks like. Here we had a buy zone set up right now that went for there, and here's another buy zone set up we're going into again. Here's our deep liquidity buys and sells. But what it is, it's a distortion in price. So this is what a liquidity grab refers to. You get a big distortion in price. You get a big distortion in price. It's coming down and then it comes back up and closes. All right. What that does is that distortion in price is accumulation and distribution areas of where the market is coming in on a temporary distortion of price. And what they do is they're placing trades where liquidity is likely to be accumulated. So what happens is, just like on this buy setup that happened this morning, or this sell setup, we'll go back. This is a buy setup right now here that's going on right now, guys, on the S&P on a 25. Let's go back to NASDAQ futures. When prices get to these levels of accumulated liquidity, there's often a sharp reversal in price when these orders are triggered. So these are accumulation areas where the market likes to pull back. You get a distortion of price. They pull back to these, what are called order blocks per se. And when these points of accumulated liquidity areas hit, we look for a reversal in price because these orders are triggered. This creates big opportunity for us because now we're informed where these levels are way before they happen. Okay? So you want to see where these levels are before they come up because this is market structure. This is market structure. So if it breaks out of this the possible accumulated liquidity area where this order block should take place, if it breaks out of it by one candle and keeps going, then that's break of structure. And what does that tell us? That's a shift in market momentum. It can go the other way. So in summation, that's what liquidity grab is. It's a distortion in price where it comes into a defined area of accumulated liquidity where it should reverse sharply once it gets inside of that zone. I call them supply-demand liquidity zones. If it does not reverse inside that zone, that's called break of market structure. And it should just go to the next zone or what have you. It's non-tradable. So you want to see market behavior come inside this zone and reverse. It's that simple. All right. And if it doesn't reverse inside of that zone, if they don't grab accumulated liquidity inside the zone, if they don't grab accumulated liquidity, what are they going to do? It breaks market structure and goes the other way. How do we trade it? These are very, very leading. Let me skinny it down so we see the buys and sells together. So this is from 8:52 to 10 o'clock. This is a 10-minute period, right? I got my deep liquidity zone, my two deep liquidity zones up right now. So what that tells me, if I get up to these zones, market structure tells us that it should reverse. So what you want to see, you want to see a V-top. I'm using a 1-130 chart, by the way. I use this on the NASDAQ. Unirenko 1-130. I want to see come into my zone. I don't want to close outside of my zone. That's how accurate this can be, because that means it broke market structure. As long as it stays inside my zone and we get what's called a V-top, meaning this big 30-tick bar down, then our automated strategy, you can get in at the V-top right here at 19,181 a quarter with a predetermined stop, or you can let our liquidity grab trader who looks for the first distortion in price to get short here and let it manage this trade for you. Same thing here. We come inside of the accumulated liquidity grab area. If it breaks outside of this level, that means you broke market structure. We cannot trade the setup. You forget about it. You don't trade it. But if you get a reversal, here's our reversal. There's our Unirenko bar reversal. That activates a trade and gets short at 19,177.50, or you can wait for the first automated pullback in price, which our automated software will get you in right there for the big push. Next one. Here we go. We get into the accumulated liquidity zone. Looking for order blocks to reverse this. Order block should reverse this. It does not. It closes outside of my zone. So what does that tell me? It tells me market structure is broke. It's probably going to the next zone. You don't trade. Comes up to the next zone, stops right on it. It can close inside of it or stop right on it. It tells me I'm at a key liquidity zone. Possible liquidity grab that's going to take place. So what do we want to do? If it doesn't break market structure up here at 19,197 and we get a V-top, meaning we get this reversal candle that comes in, that qualifies. There's your entry short, 19,185.50, or we can take the first distortion in price with the automated strategy we have, and it'll fire you in right there, manage your stop, manage your position on the dollar amount or profit targets. So these are liquidity grab. This is liquidity grab trading inside of these predetermined zones. Now, the cool thing about these deeper zones, I tell traders all the time that we're not waiting around 2 hours or 3 hours for a reaction. If these zones are truly where they're doing an accumulated liquidity grab, then they're going to reverse and react off these zones immediately. And we should see runs within 10 minutes, 10 to 15 minute run. So this is a 1-130 chart, 1-130. For you traders, the settings are this. You put on the SYM outer edge indicator. You go up to trend. You put in my proprietary SymmTickLiquidity bar. SymmTickLiquidity bar. I have the trend filters built into it already. You put 100 and 200 as your setting. You insert it twice. There's 100, 200. That's going to give these levels. Works on the S&P the same way. If I go to the S&P and I look at the S&P, the S&P yesterday, this yesterday morning, it got into my accumulated liquidity grab zone. This is a shallow zone right here, shallow. But here's a deeper zone. We got a nice big reaction, and the big move started in the morning right there. That's where the big move started. It started 8:35. If you see my two zones connect, or what I call confluence, my 100 and 200 zones connect, or they conflue when they're on top of each other, and you get inside both zones together and you V-top, look for a large possible run, because what you've done, you got into a serious big accumulated liquidity grab that did not break the high market structure in either one, and it V-top, and that went from 31 down to 97, 34 S&P point potential run, 33 S&P point potential run. Now look at these sell zones in here. Let's say you want additional sell zones, right? These are all zones that it came up to on if you change the level to 25. So I like the deeper liquidity grabs because they're larger runs. But all you got to do is change this to 25. You can add another indicator in there. Yours is called Sim Out or Edge. I just name them my name because I program them. You go in here and you put it to Sim Rico, 25 setting. You go to 100. These are all standard 100, 0 speed candle. Our proprietary 30-year backtested zone. That's what creates these nice levels. Now what you're going to do, if you add the 25 in, it's going to create shallow zones. Now watch. Now you get more. Now you get the shallow zones. This came up yesterday. Came right up to it. The move was 07 3/4 down to 97, 10-point run. Next one came up to my shallow zone, 09 1/2, and it got cranked all the way down to 66. So the shallow runs still work. Another shallow zone came into my shallow zone. This is a sell. The V-top 77 down to 56. So 20-point S&P run. So these runs are not small guys out of these zones. This is the guy that starts it all, though. This is the guy that starts it all. Now, what I want you to see, that conflude on top of each other, right? That should be your largest trade of potentially the week when they conflude like that, if it pulls you in. And these are shallow zones. Now, if you don't want shallow zones, if you don't want these shallow zones like here, 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 and here, and you just want to trade the big zones, you're not going to get a lot of trades during the week. Just take it off. Remove it. And now you're only looking for big zone sells or big zone buys. You're looking for, like, here's a accumulation. This is a dual confluence. Both my zones collided together. That means, that tells me they're looking for a big order block down here. Big order block should be big right inside this zone. It did not break market structure on both of them. This is accumulated liquidity grab, potential big run. 55.44 yesterday. 75. $20 S&P per run. So when they collide, I mean, they conflude together, watch out. And if they do singles like this, you still get nice runs. This is a big liquidity grab. Did not break market structure. Market takes off. Keep it simple like that. Here's another big, deep liquidity grab. Went to the other one. The two of them work really good together. Nice run. That run was from 28.5 to 59. 30 S&P point run. So you can see when they come down to these liquidity grab structure levels, here's another big one. Another big one here, 11.15. Another big one. Another big one. Another big one. So you can see where they're occurring, okay? Today, are we close to any type of Deep liquidity grabs? No. You know what they're doing? They're playing the 25 liquidity grabs, just small liquidity grabs. Watch. Let me add that back in on a blank chart. Keep it simple. 25, 100, 0. Our 30-year backtested zone, which creates all these nice zones for us. What is the market doing this morning? If you do the 20, now if you do the 25, you see how the hundreds are elongated, meaning you can see where they're at. The 25, you can eyeball judge it getting inside of it, but I just extend them so you can see them. There's your buy zone. Extend it. And I said we had another buy zone when we're doing this video. So what they're doing, they're reacting off the smaller buy zones right now is what they're doing. The shorter Renko, not the shorter Renko, but the shorter, shallow buy zones. Here's your sell zones up here. Now, what I like to do to get fresh supply demand or fresh liquidity grab zones, I like to change this to NYMEX Metals RTH6. So I'm showing you right here. You can do any Renko size because the liquidity grab structure doesn't change the levels. So I have a 1/130 showing here. So what that means is this is going to be 30 ticks on the reversal outside the zone. But you can do, let me show you. It's not going to change your zones if you go lower down to 1/120 to lower your stops. Excuse me, the zones are going to stay the same. So let's take a look at it. See the reversal inside the zones? This is a buy zone. This is a buy zone. Now, if you want to use our automated strategy, it's going to get you long the first liquidity grab distortion in price right at this candle. It's going to get you long right there after that first distortion in price. It got you long at 56.43.5. We're sitting at 47 right now. 56.43.5 sitting at 47. All right, you'll have a red line that comes up. Just like that, your stop line, and you can adjust your stop, click on it, move it up, whatever, how many, and once you click on it again, that's your new stop to trail. But you can see the market after news days reacted off of two shallow accumulated liquidity grab zones. Because underneath this, let me show you how I extend it forward. You see them right here? Right there they are. For the 25s, I just extend it out until, see if it hits. So this tells me one thing. If I break this zone, guess where price action is probably going to? If it closes, starts closing bullets, right down here, right? So these are buy zones to reactive. So we had two buy zones that have hit on the 25 setting right after news.